Trump's trade torture, oh gee, it's hurting the stock market, dollars diving, and 40% house price BS. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, this Trump trade torture of the stock market, is it ever going to stop?
Well, I guess Peter's going to continue until he wins. That's his legacy, or that's the way he plays the game. He's won so far against Canada. He's won against Mexico. He's arguably won against the EU. Yeah, China's still out there. So
I hope he can beat China, because if he does, the market will go up. But if they keep fighting, the market's going for us is going to go down.
Yeah, it's been interesting the way our market sentiment has sort of turned around. I mean, I guess, as you and I have said this now for some time, I couldn't see a lot of reason to buy our market, so I'm not really surprised. No. I think the other thing is we've seen a lot of pressure on stocks like CSL. I've absolutely been a CSL fan.
One of the best companies in the world.
Yeah, yesterday or today, Tuesday closed at 188.60. It's down 19% from top to high. Got to be getting
the buying territory.
Obviously, the technicians are going to say, it's crossed below its 50-day moving average and all sorts of stuff, but that's been a big pullback on CSL, and Cochlear have also had a big pullback.
Yeah, but you've always been a big fan of CSL. Your feeling is we're getting close to buying territory, but you wouldn't rush in at the moment.
I'm just not quite there, because longer memory. This June last year, CSL was $120, $130. That's why I like the stock. It's went all the way up to $230. Did I sell any at $232? No, I was afraid, like everybody else. Look, I want to get back into CSL. I'm just not sure I'm there yet, but it's certainly on the radar. A 19% fall now from top to high. Yeah. From high to where it closed.
You said that last time. I didn't pick you up top to high.
Yeah.
Okay. Top to bottom.
Looking interesting.
Okay, right. Let's go. The bell rang.
Yeah.
Dollar diving.
Yeah, look, it really hasn't been a dive. Okay, we're at 70.8 cents.
We were 78 early in the year, I think.
Yeah, look, it's come off, but every currency has. This is what's going on here. Of course, is the US dollar. Money is going to the US dollar. US interest rates are going up. The rest of the world interest rates are flat to going down. Money is flowing to the US. US economy is booming. Yeah. And that's where people will invest. And so every other currency gets caught in its wake. Now, we have come down, so we're weaker against the euro and the pound and the yen. But we really haven't given back that much. I think we're getting back to where we need to be. 70 cents is about, I think everyone thinks about the long-term market.
It's good for the economy.
Good for the economy. It'll probably go a bit lower. I mean, but it's not, this is not the 40% house price fall story.
That's the next one.
That's the next one. This is not a crash in the Aussie dollar, right? No. This is just a necessary bit of weakness, and it's as much about the strength of the US dollar as it is about the Aussie dollar.
Okay, so if you're going on holidays, don't go. But if you're going on holidays at Christmas, don't go to the USA. Go to Europe, because you'll buy more in Europe than you will in the USA.
We're down to about 61.5 euros. We were up in the high 60s, so there has been a fall there, but it's not. This is more about the US dollar. Our risk on the currency is not the US dollar going up. It's really about commodity prices. At the moment, oil and commodity prices are okay, but I think it's good for us, the Aussie dollar going down. So I'm not no worry.
Let's go to the 40% house price BS. And I've covered this on the website. I hate the fact that news is out there. But Paul and I have recently talked to Frank Gilbert of BIS, Oxford Economics, one of the best property economists in the country. What did Frank say?
Absolute BS, to quote Frank. I mean, look, this story just doesn't go away. It's like the ABC just keeps running it.
Fairfax too. Fairfax is mad on it.
Fairfax is mad. I don't know why but they used to understand they don't anymore. They used to have an interest in domain. But look, the housing market is pulling back. It needed to pull back. It's had a huge rally, and we've had too much construction. We always said, that as construction came on, apartments got built eventually, supply would meet demand, supplies met demand, and so it needs to pull back a bit. That's what it's doing. Is it going to fall 40%? Well, if interest rates go up and if unemployment goes up, possibly. But, interest rates would need to go up 2 or 3 or 4%. Unemployment would need to go up to sort of about 10%. I don't think those scenarios on the cards.
And Frank Gilbert doesn't even see a trade war having such a serious effect on the overall economy that we would get that sort of situation. Frank thought Sydney and Melbourne around 10% over the 2 years. So we've already done 6% in Sydney, maybe another 4 or 5%. And I reckon this is a guy who spends his whole life looking at property prices.
I thought one of the interesting things, and people should look at our podcast, was he's actually very bullish still about commercial property in Sydney in particular, Melbourne a little bit, and not in the other states. But he's saying that the city property market's got another 3 or 4 years to run. He thinks this is going to be really good returns still in city property. Commercial rents are going to tighten. So worth going to the podcast because there still are investment opportunities, and I think if you're looking for returns, reasonably safe returns, it's worthwhile having listened to what Frank's got to say.
And I love the fact that he doesn't even see a recession coming up for Australia within 3 to 5 years. I love that.
I always thought, Peter, you are the epitome of a glass half full guy.
Yes.
I think he's even more full than you are.
But Frank is not always like that. Frank is a guy who can oscillate. I love his oscillation to the positive. Isn't it good to see that Switz is on the money again?
On the money, yep. Time to go, I guess.
Okay. And I'm Peter Switz.
I'm Paul Rickard.
And we're less mad about money.
This content has been prepared without taking account of an individual's financial objectives, needs, or financial situation. It does not constitute formal advice. Before acting, any individual should consider the appropriateness of the information, having regard to the individual's financial situation, needs, and financial objectives. Past performance is not a guide for future performance. AFSL 286531.